From 1st January 2019, when the FRS116 Lease Accounting come into action, consumer product companies as well as retailers with a lot of lease space, they would have to recognize both the right of use asset and its related liabilities. With this recognition, their balance sheet will have very different matrices. The financial covenants, ratios will change, and companies need to prepare themselves to assess both the right of use as well as the related liabilities, and work should start from today in order to be prepared for 1st January 2019. Generally, lessee needs to identify the assets that comprises the right of use during the lease period. They need to measure the related assets and the liability for the leased. The third step would be to allocate the lease components into the leased and non-leased. Non-leased would generally be service charges, A&P charges that lessor charge to. Those are not part of your assets and liabilities. You have to then allocate that appropriately and then collect all the information and disclose it properly in current year and prior years. So my advice would be to engage relevant key stakeholders that are involved. Communication is key. Board members, leasing department, legal department, and the entire finance team, because you need to collate a lot of information, you need to gather a lot of data, you need to do a determination of whether it should fall within FRS 116 or outside of it. Here in Robinson and RSH, we actually engage our auditors as well to staff training, ensure that we have the relevant definition in place, evaluate assets that needs to be accounted for, whether any lease can fall within the standards or outside the standards. Because of the amount of space that we have more more than 600 leases, we rather be well prepared. And so we are starting our staff training as of today. I feel that as a group, it is good for all of you to be prepared ahead of time, address your bankers, your covenants will change, your balance sheet will change. It is good to preempt the relevant stakeholders ahead of time. So it's better to start now. Accounting standard evolves and it changes with time. As we need to keep up with relevant information and standards and to offer business proper guidance in decisions, it is always good to keep learning, to keep understanding, read up, and be ready for what is to come.